Let's take a look at what's going on with regional banking stocks and banks in general here before I get to one of my favorite guests I've ever had on this show. They're up, and they're up in the face of what seems to look like an increasing likelihood the Federal Reserve is going to raise interest rates next month. That is far from a sure thing. You know, those sure things go. But they seem to be fine and relatively sanguine with it. As of the markets, up 200 points yesterday, 140 today, on the idea, well, if they're raising rates, presumably that's a sign the economy is good and can withstand it. Let's get reaction to all of that with David Stockman, of course, Ronald Reagan's budget director. He has been warning and banging the drum, trying to shout out loud to anyone who listens, Republicans, Democrats, that if we don't do something about all of this debt that's piling up, everyone's going to pay. David Stockman, good to see you.
Very good to be here.
You said something interesting the other day about Donald Trump. Not that you were going to be a wholehearted supporter, but that Washington could use someone who's going to shake things up.
Yeah, I think we need a disruptor. We have been going down the same path now for 25 years, and what has it led to? $19 trillion of debt, a Federal Reserve that's out of control. They have had the interest rate at zero practically for 90 straight months. So the fact that they might start rising at the first hike since, what, December, I mean, you welcome that. I welcome that, but it's a pinprick. You have to recognize that the interest rate is the mother's milk of speculation when it's at zero. Wall Street funds itself in the money market, and the Fed has had its foot on that interest rate at zero for 90 months. It's generated the most spectacular run of speculation and bubble finance and overvaluation of everything, bonds and stocks that we've seen in history. We've leveraged off of that mightily. Mightily. All right, so I have a feeling that they're not going to raise. They'll find any excuse not to. They might, but I just don't see them doing it. And they'll seize on any excuse not to. But obviously the markets have changed their minds that they're ready and okay with that. I know you feel about rates being too low, but how do you think the markets will respond to a hike? Well, there's been a brave front in the last couple of days. If the Fed is going to raise rates, that must mean everything is swell. When has the Fed ever gotten it right about the economy? True. Did it see the crash coming in 2000? Did it see the housing bubble? Did it see the Wall Street meltdown in 2008? Or the bubble it's creating now? The bubble it's creating now. Or did it project the GDP growth rate even remotely accurately for the last 6 years running? The answer is no, no, and no. It's always wrong. It is lost. It has no clear view of the future, and therefore for the markets to conclude that everything is all better, that we're moving upward ever higher, I think is a huge error. And when we actually get to where I think we're going, which is a recession, there will be massive panic in selling on Wall Street. When is that recession coming? I would say by the end of this year or next year. After all, we're 84 months into this so-called recovery, as tepid as it's been. The longest one in history is a little over 100 months. But you mentioned Donald Trump as being maybe a welcome figure in Washington because he's a great disruptor, yet he has said nothing about reining in entitlements or doing anything to address government growth. He wants to spend more on defense. And I'm thinking to myself, when I heard those disruptor comments of yours, David Stockman has no idea what this guy's like. You know, I think I am not very happy with what he said about entitlements. You need to at least... What is he going to disrupt if he's not even going to touch them? Well, what I like is that he's not schooled in all the rationalizations, all the theories that Washington has been running on, both in foreign policy and domestically, and pretending that debt don't matter. But he has said we don't need to do anything there. I think maybe he'll discover the facts of life, and at least he recognizes that $19 trillion of debt is more than we can live with, that if we continue down this path, it'll be $30 billion within a decade. We'll have a debt-to-GDP ratio equal to practically Greece. I think he at least has some sense that debt can be dangerous. He's had a lot of experience with it. So he could always, in the past, claim bankruptcy, right? Yes, the U.S. doesn't have that option. I don't think we have that option, but essentially, that's what Fed policy today leads to. They're determined to have 2% inflation. What does that mean? After 30 years, a 30-year government bond is worth 55 cents on the dollar. Now, if that's not a default, if that's not a huge haircut, I don't know what is. So my point is, one way or another, with outright default someday down the road if we keep going this way, or deflationary, inflationary default, we can't live with this debt.